soft pulls, hard pulls, there's a difference there. And one thing that we just touched on, Brad, when you talk about what's a hard credit pull, I'm going to bring something back up again, but can you explain the difference and what it means in the mortgage process?
Sure. A soft pull is basically where you really haven't specifically applied for credit. It's more of a passive look. If you get something in the mail about pre-screening for credit cards, things of that nature, doesn't have any effect on credit score. It's sort of an invisible thing, I like to say, behind the scenes. A hard pull, and of course, that sounds so terrifying. Oh my gosh, I've got a hard pull.
Yeah.
It's simply an actual credit inquiry based on credit you've actively pursued. And even though it might sound like a bad thing or have sort of a negative connotation, it is the necessary part of obtaining credit. I often tell my clients the whole purpose of having credit is to get more credit. If you won the lottery today, you probably wouldn't care about what your credit rating is because you really wouldn't need credit anymore. So it doesn't make sense for you to necessarily be penalized for using it because that's why it's there. So a hard pull is simply an actual inquiry based on something that you're specifically applying for, whether it be a vehicle loan or in our case, a mortgage loan.
Yeah, and so I want to touch on that. And Peter, I'm going to ask you a question in a minute. So a hard credit pull, getting a mortgage, buying a car, getting that credit card, all is a necessary part of obtaining that credit. But where potential borrowers could be hurt with their credit score is if they're shopping around for multiple things. If they're shopping around for a house, a car, and a couple credit cards all at the same time, Peter, that's when they could really see the negative impact on their credit score, correct?
They could, yes. I would agree with that. And if I just want to make a point here, whether it's a soft pull or a hard pull, each of those pulls are going to create an inquiry. So a lot of consumers think that a soft pull doesn't create the inquiry. Every time you knock on the door at TransUnion, Equifax, and Experian, no matter what the industry is, it generates an inquiry. So on the soft pull side, if you think about utilities, they're going to pull credit. You think about insurance, they're going to generate a credit report. Now they're using their own scoring models, but those are soft pulls. As Brad said, it's behind the scenes where it's not going to impact my mortgage or my car loan, but they're generating a credit report and an inquiry based on their scoring models. So a lot of consumers get confused by that as, oh no, I've got to get a new cell phone or I'm changing insurance companies. Even employment are doing credit screening. Those are soft pulls, and they will not impact scores.
Okay, got it. But it is an inquiry, but not credit.
It is going to create an inquiry. Right?
Not a credit score
Right.
concern there.